Let's talk about earnings. Four key FMCG players have reported slowest volume growth in 7 quarters. Godrej Consumer Products was one of them. Darshan Mehta had a chat with the MD and CEO, Vivek Gambhir, and started off by asking him about the industry-wide slowdown. Listen in.
Yeah, frankly, we were caught a bit off guard. We were planning for a strong quarter because in the first 9 months of last year, in our India business, we had delivered a 10% growth, most of it which was volume driven. And so the consumption slowdown did take us by surprise. And as we analyzed the reasons, what seemed to be happening is that we did see a slowdown in rural, but also in pockets of urban India as well. In the trade channels, with both wholesalers and general trade, we did see some liquidity pressures as well. And in the rural side, given that food inflation has been low, farm incomes have been a bit of a challenge. And so you are seeing wage pressure as well. So a combination of all of these reasons did lead to a slowdown in the sector. And what compounded the problem for some of the players at least was, for instance, for us in our insecticides and our soap portfolio, were the effects of a prolonged and an extended winter. Having said that, our hope is that this was a temporary blip or a hiccup, and growth should start returning back in the remaining part of fiscal year 20. Having a stable government and a good monsoon will be key. Given the low penetration rates in FMCG India and the increasing aspirations of young India, we do believe that it's a matter of time before you'll start seeing growth return back in the sector. So we don't believe this is a protracted slowdown, and definitely we are hopeful that we should start seeing growth return back in the sector.
Yeah, so Vivek, you spoke about two segments, and you know the insecticide segment that saw a dip, your soap segment, as you pointed out, saw a dip. Do you believe that, you say that growth will come back, but according to you, will FY20 be challenging for both these segments?
I think our big challenge has been in the insecticide business. For the last couple of years, we have been battling the huge upsurge in illegal, unsafe incense sticks, which are harmful, particularly to young children. And so we have been working with various government bodies to try and prevent the sale of these kinds of illegal and harmful incense sticks. At the same time, we have launched recently our own neem agarbatti. It's a very safe, efficacious product, completely naturals. We launched it as a pilot in a couple of states about a few months ago. The pilots have done very well, and so we will scale up this pilot to the rest of India over the next couple of quarters. Along with that, we are launching a couple of other very disruptive innovations in other formats of insecticides as well. And so we are confident that this year will be a much stronger year as far as insecticides is concerned. On the soap side, for the year as a whole in fiscal year 19, we delivered about a 6% growth in soaps, which is quite good for a penetrated category like soaps. We continue to gain market share, so our soap business has been doing well. We are also extending our portfolio to other forms of liquid soaps, and so we've launched the first powder to liquid hand wash in the world. It's a very disruptive product, and so we'll continue launching new innovations as well. And so we are optimistic that you should see good growth in soaps this year and a revival of our performance in the insecticide category.
My final question is, how do you see input costs going ahead? Will there be pressure on the margins, or will the cooling off of several of these commodities lead to an expansion of margins in FY20?
It's a little bit difficult to say how the input prices will trend over the remainder of this year. I think it's a bit too early to say that. Having said that, our focus will be clearly on driving volume growth and increasing market share. And our belief is that if we can drive double-digit volume growth, we should be able to sustain if not improve margins. Our profits have been at a record high. So we actually believe that the right focus should be on volume growth. If we can deliver strong volume growth, we should be able to drive margin improvement as well.